Market Prospects, delivering timely information and education to prairie farmers for over 25 years. Market Prospects is brought to you by the University of Saskatchewan's Department of Bioresource Policy, Business and Economics, and these sponsors. Log on to marketprospects.usask.ca to view past programs and for information on upcoming programs.
This week on Market Prospects, we get the U.S. perspective on agricultural trade. Joining us from Washington, D.C. is Dr. Joseph Glauber, the Chief Economist with the United States Department of Agriculture. Dr. Glauber, it's a pleasure to have you as our guest on Farmgate.
Good to be back.
Well, please review current global stocks, trade, and prices for wheat, feed grains, and the soybean complex, and give us your predictions for the rest of this crop year.
Well, I think this year, we've seen record global production of wheat, corn, soybeans, rice, sunflowers, canola. Almost for every major grain and oilseed, I think this year saw a record production. Normally that would mean extremely depressed prices, but I think the thing that's missed in a lot of it is that we had record consumption for a lot of those commodities, and so that we did see some rebuilding of global stocks, but probably not as much as a lot of people would have anticipated given the level of production that we saw this year. That said, we did see some price drops, particularly for corn. We're seeing a very big rebuilding of corn stocks, and so prices for corn almost 35–40% lower than what they were last year. Of course, last year they were affected by the big drought that hit the U.S. And parts of Canada, but the prices for the other commodities off a bit. Soybeans probably not nearly as much as corn, but still all of them are showing signs of the big global records that we've seen. And I expect that to continue. We're, of course, entering a critical period here in the northern hemisphere for plantings that we'll see over the next, unfold over the next few months. But for the time being, I see some moderation in prices from the record levels that we've seen, and again, a rebuilding in stocks, but not as much as a lot of people would have anticipated given these high levels of production.
So what's your expectations for global production, trade, and prices for wheat, feed grains, and soybeans in the upcoming crop year?
Well, I think that we should see, certainly the prices right now favor a shift from corn over to soybeans. We've already seen that in South America. Brazil, I think, will see a larger soybean crop, certainly what looks to be a record soybean crop, in fact. The corn crop, which last year was enormous in South America. In fact, Brazil was the largest exporter in the world last year of corn. That should come back a little bit. I think that the second crop of corn that's normally planted it shows signs in Brazil of being a little bit less than it was last year. So I think we should see a shift, certainly in South America and in North America as well. I think many of the U.S. producers, we're expecting a little less corn planted this year and a little more soybeans, probably a shift of maybe 3 up to 5 million acres. So not a small shift in one sense. And then insofar as wheat's concerned, or at least our fall seedings were below what they were last year. So we'll have to see what happens with the spring plantings of wheat. But again, the prices for wheat have come off those records that we saw. And so in any event, we're expecting slightly less wheat plantings this year.
Now, the USDA provides large amounts of agriculture data and analysis. What's the importance of this information to market function? And did the lack of information during the U.S. government shutdown last October impact the markets?
Yeah, no, we do provide a lot of information, and I think that it's one of the advantages of having all this great deal of information is we do make it public. It's readily accessible on the internet and other places. The shutdown did have an effect. It came right at a critical period when we normally would put out a crop production report in October. The market was looking for that report. Unfortunately, they had to wait until November. I think in some cases you just didn't see as much movement in futures prices. which may sound like a good thing sometimes when you look at the volatility that you can see in futures markets. But in fact, when that information is known, then all of a sudden it moves in a hurry. And it might have been worse. It had been a couple of months prior to that. That August crop production report's always a very important one. But all the same, I think that it does show the sort of importance that these prices and other statistics are for not just the market in the U.S., but for world market.
Now, the Trans-Pacific Partnership Free Trade Agreement negotiations are underway. What kinds of benefits and drawbacks would this agreement have on U.S. and Canadian agriculture?
Well, I think that you look at the U.S. and Canada, and there's a lot of areas where we have in common, certainly in grains, things like pork production and trade. We're good competitors there, but we also, we're talking about markets like Japan where we could see some very big potential growth. For the U.S., I think another area is that we see a lot of potential, particularly in a market like Japan, is dairy. We also could see some trade with Canada under those circumstances. I also believe that Canada could be a good competitor in dairy products as well. There's a whole host of livestock products, beef, pork, and poultry, that the U.S. has seen larger exports over the last number of years, and trends moving in that direction, and we would see that continuing. But I think that what often happens with these trade agreements is what you see emerge 10 years later, 15 years later, are products that you really hadn't anticipated growing, but because they all of a sudden are looking at a lot lower barriers to access into a market, take off. And so not only do we foresee a growth in a lot of the more traditional commodities and more traditional exports, we also, it wouldn't surprise me at all to see gains come in other areas as well. And we both have sensitivities, obviously, but I think that the benefits of a Trans-Pacific Partnership certainly outweigh the potential costs or the potential increased imports and other things that we might see in some sectors.
How important is China's involvement in global agricultural trade, and what would be the impact of slower growth in China's economy?
Well, China really has been an important part. I look at particularly for commodities like soybeans, you look at growth in soybean imports. China over the last 5-10 years has really become the dominant market in world soybean trade. They're taking almost 2/3 of all trade in soybeans, and that's a growing market. It's not just a static market that they get a bigger share of. It's been growing by 4% per year, which is really a phenomenal growth rate if you think about it. And that growth rate's been going on for 10-15 years, and certainly our analysts project that those growth rates will continue. Now, what happens with a slowdown in the economy? One is what exactly is a slowdown? You're talking about a country that's seen double-digit growth in GDP for many years, and now that's now in the 7% range, 6% range, and I certainly to see a stop in something that would disrupt soybean trade or this new growth in trade in corn certainly would have an impact on a growing market that we've seen. But I think no one is really, even with a slowing Chinese economy, no one's seen a big change in terms of these larger import trends that we've seen over the last, emerge over the last 10 years.
On that
so
same
very
thought,
important market.
yeah.
I'm sorry. Go
On
ahead.
that same thought, Brazil is challenging the U.S. position as the world's largest soybean producer. What is the potential for further soybean expansion in South America?
Well, I think you're certainly exactly right on that topic. Just a few years ago, the combined exports of Argentina and Brazil overtook the U.S. as the major supplier of soybeans, and now Brazil alone is pretty much close to overtaking the U.S. So a lot of the growth that we've seen in world trade has been absorbed, if you will, by growth in South American exports. So the U.S. has grown a little bit as well, but not nearly as much as what we've seen in South America. And I expect that to continue. The U.S., Brazil is very competitive in terms of their overall cost of production. Where they have been weak, or at least where they have incurred more costs, are on the transportation side, and some of the logistics problems that they've had in terms of getting grain particularly from some of their internal regions to port and then out to to the Asian markets in particular. The U.S. still is quite competitive in that, particularly with we're seeing with the changes in the Panama Canal that we're likely to see over the next couple of years.
Great information, Dr. Glauber. Thanks again for taking time to come on Farmgate.
You bet. Thanks.
We'll continue this conversation again next week on Farmgate. We're back in 2 minutes. Please stay with us.